Right, the recording, as you can see, then it's started. Welcome again then to this tutorial exercise. And I could see then the numbers are increasing. That's very interesting then to see many people then are just joining, but then those then who can join will be able then to receive then the video recording after then the session, so that they can view and listen to it then at their own time. And even you guys then that you have joined, you are going then to have then this video so that you can re-listen it again and make sure then you understand everything. I'm starting then to share then my screen. As I've indicated then on the message on was WhatsApp that I've sent you some additional questions that you can have a look on them. So we will look at then at this second tutorial. Just expand it a bit so that I hope then you can see it. In fact, then you do have it on your side as well. So this is our first tutorial that we're going to look at today, where it says then Parfait Limited manufacture and sell a single product. So if you can look, this is also then the second question in your question bank in the textbook. Then Parfait invested 100,000 in the business and strive for a return on investment of 25%. Parfait intends not to keep any inventory. So this simply means that we don't have then at the closing or opening inventory. That's the intention of then the owner. Whatever then that we've manufactured, we are going then to make our sales with everything. Then the following data are available. Direct material per unit is 12.50. Total direct labor cost, you've given 20,000. Variable manufacturing overheads per unit, 150. Units produced is 1,000 units. Total fixed manufacturing overheads 30,000. Total fixed admin overheads 15,000. Commission per unit is 5%. Sales price per unit, you're given 40 rands. Then this isn't the requirement. I've just decided then to add then these requirements. If you can check then in the textbook, you'll find that your contribution is not there, but I just said for our practice purposes, why not? Let's put on also then the contribution there as part of then the requirement. So is to do the contribution total per unit and the ratio. B, then I do the break-even units and the value. C, the number of units Parfait Limited should sell to achieve the desired return on investment. I think then on the original question, that's where it starts. So, but I've decided then to add then the other three or two questions so that we can have more practice on this. Then the next one, the number of units to be sold to achieve the desired return on investment. If Parfait Limited decides to decrease commission on sales to 3%, then the decrease of the commission will have the effect on increasing fixed admin overheads by 10%. So that's it. That's the question. So let's get on. The first thing that we do then is to do the contribution total per unit and the ratio. But they say calculate the following using marginal income statement. So you are being instructed here. Remember that in the previous video, I've mentioned, guys, that we've got two ways then to do our solution. We can go then for the formula approach, or we can go then for the income statement approach. But in this case, then we are given instruction that we must use the income statement approach then to have our answers. So we'll go then for our income statement approach. That's where then we start. We start then again there with sales. We said that then after then the sales you minus your variable cost. Sometimes it's good then guys then when your variable costs then are given by name, then just detail them about what are the variable costs then that you have. Remember then the variable costs then that we've got a variable production, that is your direct material. You've got then direct labor, variable overheads. It's also given there. Looking at the question, what other variables that we have? Already mentioned that the material, labor, and manufacturing overheads. Do you see any variable costs that we have on that question? Going once, going twice. Yes, we do have. Look at the commission. Commission is a variable cost, guys. Because when you look at then at the commission is based then on the number of units that are being sold. So it's not a fixed amount. So it will increase or decrease then as per the number of units. So those are the variable costs then that we have then to come up then with our contribution. Then we minus fixed cost. You look at your fixed cost then that we have there. You've got then your total fixed manufacturing and your fixed admin. So those are the fixed costs that we have, manufacturing and admin. So these are the fixed costs that we have then to arrive then to our profit or then the loss. Once again, remember then the advice guys are said that when you draw up this income statement, you draw it then in 3 columns. Don't forget that. You have then your total column, your per unit column, and the percentage column. This is going then to help you. And I've mentioned then to you guys then that the very first thing that you have to do, remember then the question, the very first question says that let's calculate our contribution total. This is what we're looking, contribution per unit and the ratio. That's what you've been asked then to. But then the very first thing, guys, when you are doing then or you're using income statement approach, put down what is given for you. That's going then to help you then to find then the unknown or to answer then the question. That's what then you need then to do first. So what is given for us? We've got then the direct material per unit. So we just go then and said, oh, this is where then our direct material it is, and we've given then a per unit of 12.50. You've got your total direct labor cost. You've got a total column. You just simply put there, 20,000. You're not calculating anything for now. You're just putting them as they are being provided for you. Variable manufacturing overheads per unit. Go then to your per unit column. There is your 150 there. Units produced, then we don't need them here. Then you've got your total fixed manufacturing overheads. You've given that total of 30,000. Then, and you've got a fixed admin of 15,000. You are given a selling price or a commission. What is given in commission is a percentage. Well, I've got 5% there. Selling price per unit, you've got to 40. Now you've put it down, guys, then all then what is given then for you. Now you can start then doing the calculation. Remember, then we said that the first thing then that we're doing is to get to our contribution. We need the contribution total amount, we need the contribution per unit, as well as the ratio. So we look at then what we can find it easily in this question. We know that, okay, looking at our variable cost is kind of then being hard then to get to our variable cost and the total. But we can do the calculation and arrive then to our variable cost per unit. You're given 5% in your commission. So the question is 5% of what? Is 5% of his sales. And the question says then to us then the management or the owner of the business have no intentions then to keep an inventory, if you still remember in the heading there. So it means that whatever then that we produced, then we are going to make sales with that amount. So looking at our production, we've got 1,000 as then our total, but then it's going to be a long process. And if you can take 5% of 1,000, because you'll have then to multiply again by 40 rands. So the simplest way then, guys, because when we're looking at the commission per unit, so because commission then is also linked then to our sales. So because we're looking for commission per unit, then why don't you go then to your selling price per unit and just take then that 40 rands, simply multiply it by the 5%. Then you'll be able to identify, okay, therefore it means that the commission per unit is 2 rand, which is equal to 5% of my sales. Hope then that makes sense. So we do have then the commission. We only left then with our direct labor. That's the only figure then that we're looking for now, the direct labor per unit. That's what then we have then to try then to find out. Okay, how are we going then to get to? Hello. So we'll go then for the direct labor. So we've given 20,000 then in our direct labor. So again, we take then that 20,000 rands. We know the number of units. But now that then we've paid the 20,000 rands is because we've manufactured 1,000 units. Simply divide then by that 1,000 units and you've got 20 rands here as your direct labor per unit now. So you've got all the elements then of your variable cost per unit. You can have a total, but how much then is your total variable cost per unit? 12.50 plus then the 20 rands plus 1 rand. 150 plus and then the 2 rands. So we've got a total of 36. Are you still with me, guys? Not sure what's going on. Let me check because the other screen of mine then is so blank. Oh, okay. I can see then we're still in the meeting. Thank you. Don't know what's going on then because I've got other screen, but I can't see anything. So we've got 36 lines. One of the questions that we had, guys, then is to calculate the contribution per unit. So it doesn't matter then whether you started with a per unit or the total. So 40 then minus 36. Then we can say, okay, this is our contribution per unit. So we've got it 4 rand per unit. We can work out also then even the ratio immediately using then this. Take in this 4 rands and you simply divide it by your selling price per unit and you find that, okay, it is equal to 10% as your contribution ratio. Then you come then to the total side. You've already know, guys, but okay, we've got 1,000 units because our production units is also our sales units. So that 1,000 units, simply multiply it then by 40, that is your selling price. Then that gives you 40,000. Are you able, guys, then to see the screen that I'm sharing? They say silence means, oh, okay. I'm happy then. So we move on then to the variable cost. Now, guys, then don't waste your time. Don't try then to calculate it one by one, but it's also an advantage if you can do like that, where you'll say then 1,000 times 12.50. Then at the labor you've already have, then you say 1,000 times 150 in your variable fares and your commission 1,000 times 2 rand, then you add. But I'll go then for the simplest way of taking a 1,000 times 36. So then that gives you 36,000 here. Then you minus and then the 40,000. From the 40,000, then you could say that, okay, it means that we've got 4,000. That's then what we're looking for. That's our contribution in total. So you could see then that we've got a huge loss here in this company because we've got 45,000 as our fixed cost, but then the only contribution that we have is 4,000. So we've got a loss. If you can finish then at this income statement, that's going to be clear that the company is running at a loss. Right, then anyway, these are the values and guys that we're looking for. Then this is your A. Hope then everyone is happy with it. Then I will look then at the second run requirement. He said, now let's calculate then the break-even units and the value. Now we find out, okay, we're running at a loss. So then the company said, okay, can you assist me as a cost accountant? Do then the calculation for me, just then to see how many units and then that we need just to break the even. So we redo again then our total. Our income statement. Minus then your variable cost, which is your direct material, direct labor, variable overheads, and your commission to arrive then to your contribution minus fixed cost. That we've got the production one and the admin. So then those are the fixed costs that we have. And in this case, you said that we just want then to break even. Then remember again, we opened in our 3-column statement. Then you've got then your total, the unit, and then the percentage. What we do now, we want them to get to know then our break even. Once again, guys, then you put what is given then for you. There, then they've showed then your 20,000, and here then you've got your 12.50. Become 12.80 now. Then you've gotten your R1.50 here, and commission. Then you said that is 5%. This side fixed cost. Then you've given 30,000. Wait. This is your 30,000 and your 15,000. That's your fixed cost. Then your break even. Don't forget, guys, now when the question says that do then for a break even, it means that you know your final answer, that you've got 0 here. So you need then to put down that 0. That's going to help you. We've already identified here that, guys, and because we said that once we're looking then for the break-even units, there are two values that you are looking for, is your total contribution and your contribution per unit. They are going to help you to calculate then what you are looking for. So we've already done that. We've got 2 rands here, and we've done this calculation. Okay, it's 20 rands here, and your selling price is given again 40. That takes you then to that 36. Then we've got 4 rands. So if then I then say that we're looking for our break-even units, the first keys then that we're looking for, we do find it, we've got 4 rands here. So we're looking for contribution. So on this side, you've got 45,000 as your total fixed cost. So you say 0 plus the 45, again, you've got 45 here. And you've won the game. So you'll simply take then another 45,000 divided by 4 rands. And you'll find that, okay, in order to break even, then we need then to have sales of 11,000. Sorry, guys, and just 11,250. Those are the number of units that we need. That 11,250. If then we've managed, guys, then to make sales rate with those units, then the guarantee is that we are going then to break the even. You can prove that. So then this is then your first answer of B, the number, the break-even units. So multiply this then by 40. Then that's going to automatically take you then to the break-even value. So 11,250 times 40. So you've got a total of 450,000. Then you take again at the same 11,250, multiply it by your variable cost per unit of 36. Then that gives you 405,000. If then, guys, then you decided then to do it one by one, you'll need then to take it out this 20,000, because this 20,000, remember, it was based on how many units? 1,000 units. But now we've changed the number of units from being 1,000 to 11,250. So you'll have then to make some changes on that. Then if you say in 450,000 minus 405,000, and you say it takes you straight then to that contribution of 45,000, then minus the fixed cost of 45,000, you've got 0. That is your break even. So these are the units, and this is a value 450,000. So we're done at the second requirement in the question. Then looking at the third one, the number of units Buffy Limited should sell to achieve the desired return on investment. What was the investment? Go back then to the heading. Buffy Limited manufacture and sell a single product. Buffy invested 100,000 in the business and strive for a return on investment of 25%. So then the question now is saying that let's work out the number of units to be sold in order to achieve that desired return on the investment, which is 25% of 100,000. Then we look at that again. You can again then redo again another income statement then to do your solution. Sales minus variable cost. I won't waste then our time by writing then, okay, what are the variable costs? And we already have then the totals anyway by now. Then is equal to contribution then minus fixed costs. Now we need to have a profit because we said that we're working then on this desired return. on investment. Once again, 3-column statement, total, per unit, and the percentage. In terms of the sales, you've got your 40 rands here, you've got your 36 as your variable cost per unit. In your fixed costs, then at this point, then they're sitting at a total of 45,000. Remember that 30,000 plus 15,000. Then the profit, we know that it's going to be 25% of the desired profit, of the investment. So the investment is 100,000. That's what the owner puts into the business. Then at times the 25%. So it means that we've got a profit of 25,000 that is given for us. We know that. And what we're working on, then we need then to know how many units must be sold in order then to achieve that. So it means here now you've got 4 rands. Once again, it goes back guys then to the contribution level, but we need to have a contribution total amount and the contribution per unit. But if you check at the formula will say to you, take then your fixed cost then divide by contribution per unit. It will say in a fixed cost plus desired profit, then times fixed cost. Hence, then I've changed for you and said that take out then the fixed cost. Just use the contribution. You'll never go wrong. Because if you use the contribution in this case, it's going to be 45,000 plus 225. So you'll have then 70,000. So you'll simply say if then you've changed your formula, rearrange it then to say that is contribution divided by contribution per unit. So definitely it's going to be 70,000 simply divided by 4 rands. But if you use then the textbook, then a formula is going to be your 45,000 plus 25,000 because it will say to you now fixed cost plus desired profit divided by contribution per unit. I'm making your life easy. So it's going to be 70,000 then divided by 4 rands. So we say then let be our sales units be 17,500 in order then for us then to get to that profit of 25,000. Let's prove that. Multiply that 17,500 by 40. Then it gives us 700,000. Go to your variable cost. 17,500. Remember, the owner said here he does not have any intention then to keep the closing inventory. So hence, then we are so comfortable then to take this 17,500 as our sales times now 36. So here it gives us 630,000. And when you minus this from that 700,000, it takes you then straight to that contribution of 70,000 and minus 45,000. You've got a desired profit of 25,000. So then that's it. I'm sure then that's clear. So I mean the last one, then the last requirement where it's determine the number of units to be sold to achieve the desired return on investment. If Buffet Limited decides then to decrease commission on sales to 3%, I mean you can just adjust that then that commission from being then 2 rands, and you'll see it's going to change then your variable cost per unit, and also then you'll go and increase then your fixed administration by that 10%. That one you can do. I'm sure then by now you've managed then to understand the principle then behind the study. I'll leave it there, then that tutorial. Then the third tutorial there is going to be your task, guys, and you are going to do it on your own. I just want to jump then to the last tutorial that I provided you. Sometimes you'll find out then the question that you have or that is given then to you, it takes you out of then the production. Now we look at the companies that are offering a service. So we need also then to assist then those companies by doing then the same calculation, but the principle is still the same. But you just need then to be very careful in terms of identifying then your variable cost and your fixed cost. Now, I would like us then to look at this tutorial number 4 so that we can see then what we are talking about. Where it says the annual Chartered Institute of Management Accountants, which is CIMA conference, is to be held in Port Elizabeth in October this year. I think then this is your 7.4 in your textbook. The organizers are not sure what fee they should charge the delegates. They ask you then to assist them and give you the following information: hiring of conference venue, 60,000, cleaning of, excuse me, cleaning of conference venue, you've got 10,000, printing cost per delegate, 45 Rand, cost of refreshment per delegate, 65 Rand, cost of final dinner per delegate is 200. Delegates from Gauteng who want to attend the conference have to fly to Port Elizabeth. Return air ticket costs 2,000 Rands per person. Delegates need to stay in a hotel for 2 nights. It costs 600 per delegate per night. And this is a requirement. 700 delegates have said they will attend the conference. Determine the fee that should be charged if the organizers want to break even. Compile a marginal income statement to determine the fee per delegate. Let's go then to that. Tutorial number 4. Again, we look at, now instead of talking of it says, now we talk of then of the fee, because that's what we'll charge is a fee. We're not selling then anything. Minus variable cost. To not confuse. So let's say fee or sales. But yeah, there's nothing that we're selling in this time, but it's a fee. Yeah. Minus your variable cost. Now we need then to look at the question, guys, and identify our variable cost. But what are the variable costs we have? The first cost that is shown here is the hiring of conference venue. How are we going to classify that? Can we classify it as a variable cost or a fixed cost? In order then to be able then to understand that, guys, and we need then to ask ourselves, okay, let's say then we've got 700 delegates. The conference venue, how much are we going then to pay? We will pay 60,000. What if then we've got only 200 delegates? How much are we going to pay for the conference venue? Still, again, it's going to be 60,000. So then that shows you that conference venue, the hiring the amount is a fixed amount. It has nothing then to do with the volume or the number of people that will attend the conference. Cleaning of conference venue, again, that cleaning cost, and it has nothing then to do with the number of people. So that again became then a fixed amount. Printing cost per delegate, 45 Rand. Now you could see then it's in a per delegate. So then it shows that then now the total amount is linked then to the number of people who attend the conference. Then it qualifies then that amount to be a variable amount. So we've got printing cost, cost of refreshment per delegate. Again, the minute it says per delegate, that tells you that is also that refreshment is also then part of your variable amount. Cost of final dinner per delegate, that's also then your variable amount. Then it takes your contribution minus fixed cost. We've already identified that we've got hiring and cleaning. Then, to arrive then at 2 hour break, even. Maybe we'll only do then this first requirement because of the time. I understand that you've got another class at 10 o'clock. But at least I've shown you then how to start then this question. Total per unit and the percentage. Once again, the principle is still the same, guys. You put down what is given for you first. So we've got hiring of a conference venue. 60,000 is given. Put that down. 10,000 here. That is your cleaning. Printing cost per delegate, you've given 45. Cost of refreshment per delegate is 65. Final dinner, you've got 200. So that's what you have. And looking now at the question says now you've got 700 delegates, and now who confirmed that then they will attend? So we do know then the number, but we've got 700. But then what is a challenge here is the fee or the selling price per unit, if then we may put it like that. So that's the question then from the management. But what fee then they must charge to this 700 delegate, just then to break the EV. So that means again we do have an answer here. We've got 0. Always, guys, then you know the very first keys then that you are looking for. You are looking at your contribution total amount and the contribution per unit. I want this, guys, then to be in your mind. So you need then to look then how are we going to get to the two values. Looking at our per unit, we can work out then our variable cost per unit. We've got 45 Rand plus the 65 plus 200. So we've got 310 as our variable cost per unit. But the challenge now, we don't have then now the fee per delegate or the selling price per unit, if we may use that, so that we can get to our contribution per unit. So we are stuck when it comes into the per unit column. That's okay. Let's try then another route. Let's look at our total column. Obviously, then we can't do anything then from top to bottom. But when we look at our total column, we can move. Then if we look then from bottom up, because we do know then our final answer that is 0, and we do have then the total fixed cost that is sitting at 70,000. So we can say 0 plus 70,000 to add up then and say, okay, therefore we've got to 70,000 as a contribution. So we did manage, guys, to find our very first key, which is a contribution total amount. So we do have then that 70,000. The question is now, how are we going to get to our contribution per unit? Ideally, guys, once you've got a total amount, so that total amount is it was being derived from the number of units or from the number of delegates. That's the influence of that total amount. So that's what influences 70,000 is because of the number of delegates. So the similar thing then that you can do, you can take then now this 70,000 and say, okay, let me divide this by the number of delegates that says that they will attend the conference, which is 700. So that I can see then what is the contribution per delegate. Then you can say, well, okay, it's 100 Rand. So it means that if then my total contribution is 70,000 and I've got 700 delegates, so each delegate contribute 100 Rands. And again, then you say, okay, I do have then now the contribution per unit. I can be easily get then to an answer now, where the answer was like, find out then for us then what will be the fee. So you can add it up again, take this 100 plus 310, and you say, okay, the fee must be 410. That is your fee. 410, then if you say 410 minus 310, then you've got your contribution of 100 rand. You can prove that, guys, and see if really it's going then to break the even. If you multiply then this 700 by 410. Then it gives us 287,000. Then you go into your variable cost. Again, you can take 700 times 310. Then it takes you then to 217,000. So if you take then that 287,000 minus 217, it takes you straight into 70,000. Then 70,000 minus 70,000 of fixed cost. Then you've got your zero. You just break the even. That's what we're talking about. So if you look at requirement B, they say the organizers want to make a profit of 15,000, which will be used to address a student in the tertiary institution in South Africa. Assume that the organizer charge each delegate 450 to attend the conference. How many delegates are required then to reach this profit? So that's it now. I think now you can be able then to carry on and do this exercise. Any requirements C, then you might not do it because then it takes you out then of what is being required or the principles then of CVP. They are just asking you then something else where you can also then do then that requirement D. So that's it, guys, for chapter 7, and that brought us then to the end of then this chapter. On my side, I think I've done everything for now. Not unless anyone has got a questions, then you can ask me then on in the group, or you can send a WhatsApp, then direct them to me. I can assist where you've got a problem. But in terms then of doing it as collective or as a group, I think then we've done all what we're supposed to do. And this brings us then to the end of our today's session. Thank you very much. I hope then you've managed then to understand or grasp then one or two things. You'll have then the video shortly so that you can re-listen to it and get more understanding. So I will stop then the recording now. Thank you.